Hi everyone, it's Monday, February 20th, so it is time for us to take a look at what's going to happen in the markets during this week. The main event, of course, will be on Wednesday with minutes from the FOMC meeting, which we will, of course, talk about it, and we will do a broader fundamental analysis for the dollar and the yen to finally create a plan for trading on EURUSD, usdjpy. And after my part, we will switch to Peter, where he will show you his trading plan for this week, mostly based on technical analysis. And also he will summarize what the results are for the previous week. Okay, so let's kick off. So the major currency pair bottomed on short. We are talking about EURUSD. The profit taking at the end of the week ending on February 17th and the expectations for a positive PMIs in the Eurozone. However, neither the sanity of speculators nor strong data from the Eurozone nor the hawkish rhetoric of ECB officials will be able to help the euro when the dollar is so strong. So investors are worried whether the federal funds rate will stay at 5.5% level or if the Fed will raise it to 6%. So after hitting a 20-year high in September, the USD index fell more than 11% from October to January. However, of course, in February, as you saw lately, the index covered all losses. Everyone is still focused on the idea of a dovish reversal of a Fed policy and is currently reviewing their position. So the reason for this is a series of good economic reports from the United States, after which talking about a soft or hard landing has become meaningless, we could say. So many people on the market are now wondering whether there will be an increase or not. Strong data on employment, inflation, and retail sales in the US led to an increase in, for example, the index of economic surprises, which is run by Citigroup, and of course the increase in yields in US treasuries. So the rally of rates on the debt market very likely built an unsurmountable wall in front of the stock indices and strengthened the position of the USD. So we can see it in the S&P 500, which may not be able to sustain February's high with such high treasury yields. So Fed officials are constantly thinking that they're overreacting or not doing enough. So in turn, strong macroeconomic statistics in US allow us to speculate that perhaps maybe we need to act more decisively. Unless the economy cools down as a result of draconian measures, the fight against the highest inflation in decades is not over. So another question, how to fight this at this stage? And so the most aggressive hawks, including the president of St. Louis Fed, James Bullard, believe that raising the rates to 5.5 as soon as possible is necessary to bring inflation down to the 2% target. On the other hand, Richmond Fed chairman Thomas Barkin disagrees. In his opinion, such a policy requires a deep understanding of the time lags of the impact of monetary restrictions on the economy. So it is better to move gradually, increasing the cost of credit by the traditional 25 basis points, because you can see the moment when it is better to stop. So most FOMC members agree with Thomas Barkin, but if not, the US dollar could strengthen even further. Investors will be looking for signs of a split and a greater than expected influence of aggressive hawks in Wednesday's minutes from the Fed's meeting. However, it will happen in the middle of the week, and at the beginning, the publication of PMI data from the Eurozone may provoke buying of the euro based on rumors. So what we can do is, for example, use the breakout of the resistance at 107.05 to open new ones or add long positions on EURUSD to those previously opened at the lower end of the 106 to 185 consolidation range. Okay, now let's move on to yen. And here, in recent times, we've seen expectations for the BOG's monetary normalization in January putting pressure on usdjpy. In February, the BOG failed to normalize its monetary policy and the pair rose. Now investors are wondering what the BOG will do and where the yen will go, of course. So if Haruhiko Kuroda fails to adjust monetary policy at his last BOG meeting in March, he will leave a bad legacy to his successor. Kazuo Ueda will most likely have to normalize a BOG policy and will face strong market pressure for change. And the current governor of the Bank of Japan, as we have discussed in previous episodes, may facilitate another monetary tightening. So therefore, investors expect Kuroda to sound hawkish at the March BOJ meeting and are willing to sell USDJPY. So the BOJ's ultra-light monetary policy is on a predetermined path. So with wages rising at the fastest pace in decades, price pressures mounting, and debt turmoil mounting, where the central bank, as we know, holds over 50% of bonds, the yield curve control policy should come to an end. And so about 70% of Bloomberg experts believe that the adjustment of monetary policy to the current situation will take place by July. And various polls show that the number of supporters of normalization is growing. Only 15% of respondents believe that there will be an increase in interest rates before the target yield range is extended. So for most experts, it will be the other way around, of course. Now BNP Paribas even puts the chances of loosening control over the bond market at the BOJ meeting in March to split it for 50-50. The market is gradually agreeing. The yen's volatility is increasing, although it has not yet reached its January highs. So then, after a December surprise from the Bank of Japan, investors expect the next step of the first meeting in 2023. All in all, the normalization of monetary policy is a positive factor for the USDJPY pairs. In addition to expectations of an economic recession in the US, this factor put pressure on the pair in October to January. So the dollar strengthened against the yen due to strong domestic data from the US related to rising yields of treasury bonds, and currently it can be assumed that most of the positive factors are priced in the dollar quotes. Some analysts wonder whether the increase in inflation in the US, or rather its weaker decline we should say, and as well as retail sales, is temporary, i.e. whether we have experienced a slight correction in the data. So if the US economic data is weak in February, USDJPY should fall. Additionally, traders expect Haruhiko Kuroda to announce monetary normalization at the March BOJ meeting and take profits from USD long positions exiting the trade. Thus, the pair rebounded from the upper limit of the consolidation range of 127.5 to 134.2 indicated in January. And so, USDJPY longs have been profitable for the past 3 weeks, and now the trend may reverse. But unless the price consolidates above the 134.2 level, shorts will make sense here. So, that is all from my side. Now we will switch to Peter and he will show you what he prepared for us this week, and on top of that discuss some of his results from the previous week. So, on to you, Peter.
Hi guys, how you doing? Hopefully everything is alright. Before we are going to start our analysis, I strongly encourage you to join our Telegram group where we do from time to time also live trading days and 6x when it comes to CFX altcoin and we were buying around 5 and it was live call in our live trading room. Today we are trading around 30 cents, so perfect call. Also, last week live trading room was very positive when it comes to the FX market. So again, you are going to find the link in the description. Join our Telegram group for free. All right, so quick and short and sweet analysis. Let's have a look what we have when it comes to the euro dollar weekly chart. We are going to make it weekly and daily, so that's the latest price action. Very important is what we have to the left side. Some time ago, before 2020, if I'm not mistaken. Anyway, let's focus on latest developments. So there is a swing high over here, all right, and we are rejecting. The thing is that the rejection is as of now holding the swing low. We have weekly chart and and we hit the buying zone right now. And as you can see, previous week we were trying to move higher, but we stopped at the latest lower shadow we've seen 5 weeks ago. So as of now, let's make and place few more lines. All right, so as of now, to the downside, we are looking for the demand around 106 based on the weekly chart. To the upside, we are looking around 1930. All right, well, the thing is that we have to get back below 106 to open lower levels. In that case, we are talking about this lower shadow, which is connected. The lower shadow is connected to the latest weakness. From here, we went lower. So that's another significant development when it comes to the demand. In that case, we are talking about the levels close to 104, 104.80. One more line, we are talking about the previous week high, all right, and it's around 108. Let's switch lower to the daily chart and let's have a look what we have here. Here we have the swing low. We are going to change the color because we changed the time frame, and we are talking about the swing low around 105.20. So the zone around 105, strong significant demand zone, and as you can see, two upper shadows on the daily chart here and here, meaning that the supply resides around 108. Okay, so in that case, we are right now testing again lower levels, but I'm looking, to be honest with you, I'm looking for the downside break, and I'm looking for at least this 1, 2, 3 development and the retest of these lower levels down towards 105. So rather, as of now, I'm looking for the fade any kind of the move, but from the intraday perspective, of course, I'm going to look for the price action around previous week low. The next one is going to be the dollar yen. Let's have a look what we have here. From the weekly chart perspective, we broke through the latest swing high here. So as of now, the pullback, it might be the buying opportunity. Okay, so in that case, let's clean a bit the chart. Okay. So as of now, what I'm looking for is to try to buy the pullback. How low we can go? Well, in that case, I'm looking for this zone here in between 132.50 and the lower shadow over here, 129.50. From the weekly chart perspective as a buying opportunity. To the upside, the swing high over here is another line where the supply, where I do expect some supply. In that case, we are looking for 137.70. So from the medium term perspective, you may want to buy this type of the pullback with 137 as a target. Is a significant level because of the what has happened in the past. Let's switch lower to the daily chart here. Let's have a look what we have. We are trying to create swing high on a daily chart as of now, as you can see. So it's very important how we are going to behave on the high we've seen on Thursday, and we might see the confirmation. But that's the latest weakness over here, and pullback towards this level. It's also represent, as you can see, the line from the weekly chart we've seen a second ago. That's where I'm looking to buy some dollar yen short term. We are talking about the pullback down to 132.50, and I'm going to try to retest at least these levels of the supply. So this type of the price action, that's for me. In case of the break below 32.50, I'm looking for the retest failure and move down towards 130 and a little bit lower. So that's the dollar yen. And finally, let's have a look what we have when it comes to the cable. And well, market is trying to, after huge rally, trying to consolidate somewhere here, and we hit previous On the previous Friday, we hit the support, lower bottom of that consolidation, and we're trying to go higher. In that case, I'm looking for the price action on the pullback towards this level, maybe with the stop count a little bit below and strong move to the upside, at least levels 121, 80, 122 as a first target in case of the breakdown, retest and lower. Again, strongly encourage you to join our Telegram group, our live trading room inside the Telegram group. I wish you great next trading session. See you around. Take care and goodbye.